Good morning, good afternoon, good evening. You are watching the Paris Fintech Forum Communities video interview series. I'm Elliott Gotkine, and today I'm joined by the co-founder and CEO of Raisin, Tamaz Georgadze. Great to have you with us.
Thank you for having me with you, Elliott, and happy to be with you.
Okay, so before we get cracking, let's learn a little bit more and what's new about Raisin. So, Tamaz, we've spoken a few times in the past about Raisin. It's a kind of savings or deposit broker that you co-founded almost 12 years ago. But I think this is the first time we're speaking when Raisin is profitable or has its first year of profitability. How did it happen?
Yes, I mean, we are there on the market since more than 10 years. So I think it's kind of like a high time to be profitable. So we are profitable since around 2 years. And I think like two things happened there. First thing is what accelerated our growth and helped us to capitalize on our infrastructure is the reversal of the rate environment. So the rates came back. They're elevated. They will most probably stay elevated or in the positive area. So that helped us to accelerate our growth. So last year we've grown 90% in terms of the volumes of the marketplace, which goes in hand with revenues. So that's the first thing. And the second thing, I think, on a couple of our platforms, we've been quite efficient in consolidating those. Our kind of 10-year history led to the fact that we used several technologies. We merged also a couple of companies. We merged with our largest competitor in Germany called Deposit Solutions, so that we had now ample time the last 4 years to consolidate the platforms and gain the efficiency, so that this combination of accelerated growth and efficiency levers allowed us to become profitable almost exactly 2 years ago.
And I mean, you said that one of the reasons is that interest rates over the last, year or two have been rising. That now seems to have started reversing, certainly in the Eurozone and, perhaps elsewhere as well. Rates are generally expected to be coming down. Does that mean that profitability for Raisin will go into reverse as well? That perhaps this will be a flash in the pan?
No, I don't think so. So, if anything, then the profitability of the platform is going to increase. The reason is that finally, I mean, the asset space where we are playing our marketplace role is the largest asset class in the world, meaning that cash and bank deposits represent roughly half of household wealth in Europe, and that part is typically and traditionally not deployed well. What it means that the majority of the people are stuck either on current accounts with no interest rate at all, or with their house bank or incumbent bank paying rates below the market, meaning that if you calculate on the total stock of deposits, then it's around 14 trillion, including the UK, and on 14 trillion, even 100 basis points more kind of is a very big amount. It's 140 billion. So that's every 1 percentage points which we can make more for our consumers, even on our small market share, represent a large lever. So that our actually target market is this very big pot of savings currently being deployed at low rates, and that didn't change with the increasing rates, that won't change with the decreasing rates.
And you raised some, I think, 60 million euros back in March 2023. Now that you're profitable, do you still envisage having to raise more funds, perhaps to accelerate growth? Could perhaps an IPO be on the horizon?
In the last 2 years, we managed actually to reinvest our profitability into growth. I think we have enough leeway and enough room there to explore that part. So we kind of can continue growing and sustain very healthy growth rates while reinvesting our profitability from the platform. So we will not need a new primary raise for nurturing the core business. What might, of course, happen is that we want to consolidate further, and for that part to need some additional equity. Currently not foreseen, so we're not working on a new round. And the last primary has been well deployed and mostly sits still on our accounts.
Okay, and you're already in the United States, you're in the UK, you're in a number of European markets. Have you got your eye on a few other markets to go into?
Yes, sure. So I think our last expansions, the US being the last large market which we addressed, which played out very well. We launched our offering autumn last year in Poland, which was a good market start. We're still early stages there, so we are onboarding several banks to enlarge and strengthen our Polish offering. But we're thinking of several new markets, so we want to be able to launch 2 new markets a year, starting actually this and next year. And we're thinking of deploying our platform and our banking license in Europe. So we are active in a couple of Eurozone markets, being Germany, Austria, France, the Netherlands, Spain, Ireland. But equally, there are some open spots on the map where consumers currently cannot use the breadth and depth of Raisin offering. So a lot of Eastern Europe, a lot of Northern Europe, being Finland, Sweden, Denmark, but even Italy and Portugal are still not available for the consumer. So there is still a lot to do in the European Union with our existing infrastructure and with the existing banking license.
Maybe at some point you'll go into Georgia, but we've heard from Tamaz now about what's new with Raisin. So let's now learn more about Tamaz. Okay, so Tamaz, you founded Raisin in 2013. Do you still have the same excitement and passion about kind of going into work every day that you did, some 12 years ago when you started the business?
Yes, I do. At the same time, the excitement changes. So though my title and position as one of the founders and CEO didn't change over the last 12 years, the nature of the everyday work I'm doing has quite evolved. So I'm covering our platform business, so our B2C and B2B platforms. I'm covering our bank side of the marketplace and our distributors, and parts of legal and also our US business. So that's kind of quite a lot interesting stuff happening there. So it's still fun. The activity has changed, but what also changed to the positive is actually the people around and the Raisin team, Raisin crew. So I think we have the best team we had quite naturally. I mean, the company grows, so it attracts talent. So it's fun to work with the top team. It's fun to work with everyone at Raisin, and it's really fun to see Raisin team growing to around 700 employees now, and Raisiniers being a very happy crew. So it's I think really bigger fun than it was in the first days, which is a big compliment to the company.
Now, we don't have many founders here, perhaps because of the length of time that's passed, who remember growing up kind of as part of the USSR. Growing up in Georgia back when it was part of the USSR, I think you told me once your family savings were wiped out a couple of times. I'm just wondering how your kind of formative years in Georgia kind of influenced you or helped you as a founder.
Yes, so I mean, in my early years in Georgia, so it's I think one of the things which helped me is the time of instability and time of kind of necessarily needing to adapt to different environments, I think helps you develop the skills which you need as a founder. Pretty unusually, actually, our company still almost sticks to the initial business model, but a lot of shadings changed over time, right? So when we launched, the original kind of nudge of the company was we're bringing non-domiciled banks, small or mid-sized banks to Germany. If you compare to today, we run US and UK platforms are purely domestic banks. So those are kind of fully integrated offers. We started as a deposit-only proposition. It developed into a full a savings and investment position in Germany by now. We started with a third-party bank license. We own now our bank license and are banking as a service provider to third parties. So a lot of things changed and developed, and I think kind of ability to be flexible and to examine the decisions and to change your opinion and to be open to the market trend changing. This is something that my childhood helped in. I think the other thing which I think helped also Raisin to grow is I had as a child a pretty fast career in the school, so I kind of like made my Abitur or school exams with 12, which meant that I.
You also, sorry to interrupt you, Tamaz. You didn't just finish school at 12, but I think you got your master's at age 15 as well. So just trying to make sure you don't undersell yourself there.
Yes. So, and that implied that actually people you are dealing with, both in school and university, change, right? So you need to adapt to a new environment, which I think helped me to develop an ability to make friends pretty fast and retain relationships. I think which in the business we're in, which is dealing with several hundred banking institutions, we have around 300 deposit-taking banks, and building the initial team pretty fast. I think those skills helped to nurture the business in the early days, and also to build and retain the team. So I think like those two things probably kind of go into the narrative of what was helpful to build Raisin banking network business.
And if I recall correctly, your uncle was a chess grandmaster, and I'm guessing that if you're finishing school at 12 and getting a master's at 15, you're probably a bit of a prodigy yourself. What was going down the chess route ever an option for you? Could we have had Tamaz, the grandmaster? Had you put all of your efforts and intellect to that?
Yes. So even I gave it a try. So when I was very young, so I started playing chess when I was 4, and almost everyone in my family was playing chess, so that was not unusual. And I pursued my active career until I was 7. And back then, my chess teacher put my family in front of a choice: either pursue chess career seriously, what meant actually dropping from the school more or less, or like going regularly to school. And my parents were, I think, like conservative in that regard, and said like better the kid learns something and math and language in school instead of being fully focused on chess. So that I stopped playing tournaments at 7, where I think I was good. I was not great yet, so I didn't pursue that career.
I guess we'll never know. But all right, so look, Tamaz, a key part of this interview is to get your take on the future of finance. But first, we're going to take a quick break, after which we're going to continue our conversation with Raisin co-founder and CEO, Tamaz Georgadze. Welcome back. And don't forget, if you're not already a full member of our community, everything you need to join can be found at www.parisfintechforum.com. And now, Tamaz, let's talk about the future of finance. So, Tamaz, since you're in the kind of savings and investment business, I thought I'd start with interest rates. You've already said kind of the impact that they've had on Raisin. As we said, they've already started coming down in the Eurozone interest rates, assuming they continue to fall there and elsewhere. What does this mean more broadly for fintechs, perhaps for the fundraising environment and any other impacts you can think of?
I think I would say normalized rate environment, right? So because we're not in an unusual, so if you look back at the last 20, 30 years, we are not in an unusual space. So I think the normalized rate environment has made funding more difficult, needless to say, for fintechs, especially for those structurally losing money. I think that portion of the business is harder to kickstart and to entertain. I think if you have a healthy business model and just need to scale, I think that money is still available and was available along the way. So I think the second thing is, and that's being not looked to as much as all kind of businesses who have kind of natural client liquidity, quote unquote, are actually suddenly earning money. So as the banking had record profits in the last 2 years, so had some of the fintechs who have kind of pools of liquidity where clients store their money, be it SME banks, be it neobanks. So it's easier for them, though the funding has become more difficult, it's easier for them to get to profitability because their revenue base has increased and they're earning money on it. I think it's become more difficult for lending fintechs, quite naturally, because both the funding costs have shot up, but also the unsecure economic environment out there has led to worries whether the portfolios will hold up steady. I think in our very concrete space, like wealth and savings, things on balance have become better with the normalized rate environment. And I think market discipline is not bad at all because it actually kills unhealthy businesses earlier than previously, so that if you're part of a more conservative, healthy business, then it doesn't destroy your profitability necessarily. So I think this normalized, more conservative, more kind of steady environment is better if you're building a long-term successful business.
And if things are getting better, I guess potential acquisition targets for you or other fintechs that have a decent amount of cash in the bank or are profitable, I guess there become fewer bargains become available, but I guess at the same time you become stronger and have more money in which to spend. So do you think we've kind of turned the corner, certainly in parts of the fintech ecosystem, as far as valuations go, or are there still a lot of bargains out there and now's the time to, snap them up?
We've been very open to M&A in the past. So I think we've done in total like 6 deals over the last 10 years. So and like in a completely different environment, right? So it's where there were no bargains, kind of in your language, available out there, and still I think half of those worked for us pretty well. I think though still one thing is it's never to be underestimated, like how much kind of this integration effort needs time and well spent somewhere else. And the larger you get, the complexity of integration is becoming actually higher, not lower. And the other thing is, I think, though the market has normalized, actually expectations of founders of good and great companies have not normalized at all, right? So people still think in like how big can it get, so that some of the opportunities should be theoretically there, but practically they're not there because people kind of think in different dimensions than what reality might be. What I'm a bit puzzled and wonder is why do not like banks, financial institutions, tech companies are much more active in this area? Because if you look at what is happening, then mostly and typically it's actually one fintech company merging or with another one or buying another one. It's much less happening from the banks, insurer side, from the tech company side, and I think there are probably opportunities plenty in the current environment for them to create value add for their clients.
Okay, I want to change tack slightly now and ask you about generative AI, which of course is, the main trend, if you like, in terms of excitement that we've been seeing over the last 12 months. How is Raisin using it, and what impact do you think it's likely to have on the future of finance?
Yes, I think like one thing is we are using it, and we're using it where we use software. So we like actually to use the extensions, Gen AI, like powered extensions of our software. So we are open to that. We have a company policy for using that. I think in the core area of the business, which is connecting banks to the marketplace, which is all kind of individual integrations, and it's all one-to-one connectivity based on some standards, but every bank is different and every financial institution is different. So with some customization, we're not there yet. So we on that core part of the business, we're still not deploying Gen AI or working actually very much on a single project or program base with our partners. So so our strategy for this and maybe the coming year is like to use and utilize as much as we can get from the outside world and from our standard software, and to watch out and look where actually our own use cases can be. I think this proprietary marketplace part is probably the one which will come rather late in this cycle.
Well, if you're not using it perhaps that much in terms of your main business model, big tech is certainly using it a lot. Does generative AI make it more or less likely that the big tech is going to eat fintech's lunch?
I'm structurally actually like not that much or like persuaded that it's something that big tech would like to do. The business we're doing is a highly regulated business, so there is a reason why we use our bank license across European Union, and the requirements on entailed by it are quite large. Anything from anti-money laundering function and resources deployed for it, and ending with the capital requirements on the bank side. I think that part is probably something which big tech is not eager to do about. I think there are bits and pieces which are probably kind of closer to their core business, which might be closer to what their appetite stretches to. I think the closer it gets to the core banking products, like savings are, like payments infrastructure is, the harder it will, or the longer time it will take for them to make the decision and then to embrace actually the regulation and the capital needs entailed by those.
Just briefly, if you can, Tamaz, you're based in Germany, or at least your headquarters are, but you're of course a global company. Do you feel that Germany's reputation as a hub for financial innovation has recovered from the hit it took from the Wirecard scandal? Do you think people still see this as a vibrant place to go for innovation and to set up their startups, or are they best off nipping over the border to Paris?
Yeah, I think like first thing I would love to stress is that I think unlike some people see it, Wirecard, at least as we see it, as other fintechs in Germany see it, was never a fintech company. It was a DAX company at the end doing very specific payments, being entrenched into the German corporate world, but it was not specifically a fintech company. It possessed a banking license for quite some time. So what happened with Wirecard was a a large-scale fraud issue potentially, but not a particular fintech problem. So there was no fintech-specific problem there. So, to be also honest, on the other side, I think Wirecard situation has led to a frosty atmosphere towards fintechs in general in Germany, which is unfortunate because I think Germany had a great chance in terms of being the largest Eurozone market, being able to nurture fintechs. And there are some great fintech companies which emerged, be it N26, Mambo, Trade Republic, Scalable. So there are a couple of those, I think, which play on a European and global scale. I think in a hypothetical world without Wirecard, those would have developed faster and better. I think fundamentals are still very, very good. The market is large. It's competitive, which makes us fitter and stronger. I think the government and the population is pro-European, so that it allows actually European models to nurture on both sides. So it's one of the largest markets for Klarna, and at the same time, it's one of the largest domiciles for European fintechs, if you look at cross-border models. So I think in general, there are strengths we can build on, and Germany will stay a very relevant fintech domicile.
Okay, so look, Tamaz, it's now time for our round of rapid-fire questions. Are you ready?
Yes, I am.
So I've got 90 seconds on the clock. I'm going to start in just a moment. Just one-word answers would be ideal. And away we go. What fintech segment has the biggest potential over the next 5 years?
Investment and savings.
What is the biggest pain point in your everyday financial life that you would like to see resolved?
A lot of single product use cases, which I would love to be better integrated into one app.
Are bank bosses ready for the AI revolution?
Depends on the boss.
Have regulators in the EU and in the United States kept pace with all the new possibilities and behaviors we're seeing in the financial industry?
They're trying. I think
just the one word,
they're struggling,
Tamaz.
but they're trying.
All right, maybe. Have you ever personally invested in crypto?
No.
Are physical points of sales part of the future of finance?
No.
Are bank branches part of the future of finance?
No.
On a scale of 1 to 10, where 10 is the most likely and 1 is the least likely, what are the chances that in the next 10 years, one of the neobanks will be as profitable as a top-tier legacy bank? Between 1 and 10.
9.
That CBDC, central bank digital currencies, will become a mainstream reality in the US or EU?
3.
That you'll be able to open a crypto account at a top-tier bank?
Yes.
I'll give that a 10. And Swift will be still the main... and that finally, that Swift will be the main tool for transferring money around the world?
3.
Okay. Well, that, I'm afraid, is all we have time for our round of rapid-fire questions and for our conversation as a whole. So I really just want to thank Raisin co-founder and CEO Tamaz Georgadze for joining me today. Thanks so much, Tamaz.
Thank you so much, Elliott.
And for everyone watching, we'll be back again next time with another big name from the world of finance and technology. We do hope you'll be able to join us again then. In the meantime, don't forget to subscribe to the Paris Fintech Forum YouTube channel and to follow us on X at Paris Fin Forum. That's all for now. See you next time. Bye-bye.